At Numerian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you. Today, March 6, 2023, is a giant short squeeze underway in Troika stock? The cost to borrow fee for Troika has fallen significantly. Troika Media Group carried a short interest of 36.3% as of February 15. Troika also has a high cost to borrow fee of 101.77%. Troika stock is up by more than 500% year to date. Shares of Troika Media Group, Nasdaq TRKA, are up by more than 40%, leading investors to speculate that a short squeeze is currently underway. That's brought the year-to-date return for Troika stock to over 550%. The run-up was boosted by Troika announcing that it would withdraw a registration statement that detailed the resale of up to 272.76 million shares on February 17. Since then, Troika is up by about 240%. So, is a short squeeze responsible for today's price action? Let's take a look at the numbers. As of February 15, there were a total of 12.89 million shares of Troika sold short with a total value of $3.08 million. That's equivalent to a short interest as a percentage of float of 36.3%, which rose by 87.4% compared to the reading on January 31. Generally, a short interest above 10% is considered high, while a short interest above 20% is considered very high. Short interest data as of February 28 or later has not yet been released. Is a giant short squeeze underway in Troika stock? With a significantly high short interest, it's rational to assume that Troika is experiencing a short squeeze today. On top of that, there's also another factor that could be contributing to the squeeze. Today, the cost to borrow fee for Troika sits at a high 101.77%. On average, stocks have a cost to borrow fee between 0.3% and 3%, which signifies the yearly rate that short sellers must pay to borrow stock. Troika's cost to borrow fee ballooned to as high as 144.87% last Friday, and it has since fallen dramatically. A high cost to borrow fee could influence short sellers to sell out by buying shares of the underlying stock. With a higher fee, short sellers have a lesser chance of emerging profitable because they must pay a higher fee. A higher fee could also signal a scarcity of available short shares or high short seller demand, while a falling fee could signal declining short seller demand. With Troika up by so much today, it's apparent that short sellers are feeling the heat. Another catalyst that may be helping Troika is a comment from Genius Group CEO Roger Hamilton. Yesterday, Hamilton complimented Troika's acquisition of Converge and asked for details on how to contact Troika CEO Sid Toma. Thanks for watching. Numerian Capital News. Please come back tomorrow for another stock news update. Thank you.